Jamie here. Hope everyone's doing outstanding. Tuesday, March 4th, 8:56 a.m. on this fine morning. Talk quick about the market, some names and looking at go from there. S&P in the red here, was chopping around overnight and then found some pressure here. S&P is set to open about 7/10 to the downside. NASDAQ about the same amount, 0.75% to the downside. Small cap futures are down over 1.25%. So resumption here of yesterday's move. Now the question is this just some profit taking with the markets at all-time highs only 2 weeks ago, or is this the start of something bigger? So, I always say I don't have my bear suit on, but I put on a watch list. I guess, I have it out of the closet, right? And still watching areas of support on the SPY, and then watching like the yields and amount of stocks trading over the 50-day moving average, things like that, and maybe we'll get some color here in the next session or two if this is it, or if we have further downside coming. So yesterday was interesting. The market, I think it's like 7 of the past 8 sessions, the market highs was within the first 7 minutes of trading. So yesterday, the market hit highs at 933, and then that was it. I think 597 or so. And then boom, we just melted to lows at 10 o'clock. And then the ISM data came out, and that was kind of like the bottom for the morning. Bounced a little bit, chopped around um, into the afternoon, 591 or so. And then you had the press conference, the Taiwan Semiconductor presentation with President Trump talking about their $100 billion investment in Arizona. And then that press conference turned into more just, it was marred by questions around everything else outside that TSM investment, right? It was about the tariffs, it was about Ukraine and all those things. So I don't know if the market, I put this in the watch list too, if the market was playing chicken with the tariffs, like they didn't think there was going to be tariffs, these 25% tariffs on Canada and Mexico were coming. And then it seemed like once it was confirmed, finally confirmed in the afternoon, that's when the markets really started to find pressure. So definitely some uncertainty, and market doesn't like uncertainty, and I don't have the quotes on here. I don't know why I don't have the quotes, but there were some nice quotes from the ISM survey yesterday in regards to tariffs, like uncertainty around costs, uh, having cutting back on orders, all these different things until there's more certainty, more clarity, right? And typically that doesn't bode well. So anyway, we'll see what happens here. We also on Sunday was the announcement of the Crypto Strategic Reserve. There'll be a crypto meeting on Friday. You also have POTUS speaking tonight. So there's a lot of things going on this week that outside of the jobs report on Friday. I actually think the biggest catalyst, or one of the things that'll be looked at, is the next revision on the GDPnow, the Atlanta GDPnow, which will be out on Thursday. So that was another thing that kind of flew under the radar. We had the ISM news, and the headlines say, "Oh, market sold off on the ISM data." Meanwhile, the market's bounced at the when that came out. But to me, it's this GDP now estimate, and it's not a guarantee, but I mean, we went from 1.5%, 2% growth for the first quarter, now negative 2.8%. That's massive, right? And yeah, I mean, I put this in FinTwit. I can't remember the last time this is a site you always look at the CME Fed now. You look at the odds of rate cuts, right? So I'm sure this is going to garner more attention, but we'll see. The market's always pretty good forward looking indicator. Chop out some of this uncertainty. Earnings have been strong. Target this morning, strong earnings, but again, questions, and there's gonna be a lot of questions especially going forward and impacts in regards to tariffs. CEO of Target pretty much implying that prices are going to go up. So I don't know if that's going to be a trend and how much the market is priced in, but anyway. So for me, important areas, we have 575, which is the January lows. I think it was January 13th. And then you got to go all the way back to October, start of October, 563 on the SPY. Those would be kind of like lines in the sand. And then once you break under 563 on the SPY, you got to think of corrections coming down at 540. So again, I would hope to have somewhat of a bear suit on and be more puts if those supports start to break. But that's kind of what I'm looking at here. But I'm still cautiously optimistic. Maybe we chop around here. We'd love to see it close back over 584. That's the key spot. We'll close at 583.77. And then, maybe we can shake some of this off and move on to other things. But again, headlines, right? If you're around in 2020, I think it was 2013, they used to call it the taper tantrum, right? If you had QE, QE1, QE2, QE3, Project Twist, all these Ben Bernanke financial mechanisms to prop up the market. They were buying bonds and mortgage-backed securities. So back in 2013, when all of a sudden they announced, hey, we're not buying, or we might taper these, we might taper the purchases, we had this big taper tantrum and the markets just tumbled. So now you see the headlines, they have a tariff tantrum, right? The tariff tumble, whatever they're going to name this. Hopefully it's not going to be a similar setup, because 2013 there were some issues there. I think it was back in May and then the summer. So hopefully we don't have any kind of duplicate scenario there. But I think, again, it's not like this wasn't announced last month. It wasn't announced in November about the tariffs. It's not like it's a train that just came out of nowhere. This has been announced. It's just, I think the market somewhat, and a lot of folks have played kind of like chicken with this. They didn't think it was going to happen. And who knows, maybe it gets reversed in 2 weeks. So anyway, all right, so that's overall. And UPB was mentioned too. Back in the first his first presidency, we had the trade wars, trade war 1, trade war 2 with China in the summer. I remember every headline, all of a sudden we'd sell off, and then markets like magic would reverse the next couple of days and be over those levels, despite all the crazy headlines you see and people talk, oh, this is horrible. How can we have a trade war? This is bad for the economy. And all right, so that's that. So that's kind of what I'm watching. I'm open to put hedges as long as we stay under 584 in the SPY. I'll continue to look for opportunities. On the same token, I'll be very cautious adding calls. The good thing, I wouldn't say the good thing, but if the market does, when it pulls back, so a lot of these names are getting to oversold conditions, so there'll be some nice bounce opportunities. And then I always try and keep things with a grain of salt. The amount of stock trading over their 50-day moving average in the SPY is still near 50%. So so market breadth is pretty good there. Yields are falling, so yields are below the December levels now. You can make arguments on both sides. Yields falling typically imply possibly that there's slower economic growth coming, possibly, right? But that's also, I think, maybe that folks are starting to price in, hey, the Fed might start to be a little more aggressive cutting rates if this tariff situation causes more uncertainty with markets. And then the US dollar fell yesterday too, which, you got two sides of it, but the one side is, strong US dollar might weigh on economic activity. All right, so that's that. So now quick, just individual names. And, Lemonade was looking great after the open, over that 50-day moving average. It was soaring, it's almost up near $40. I'm in the back of my head, I'm like, let me just close the rest of the March 40s and add some April strikes. So almost pretty much right at the highs. I locked the last of my March 40s in for over 900%. And then it was going. I'm like, I probably shouldn't have closed those in hindsight, but you never know. And then I was looking at April's, and it was right around 12:45. The presser comes on, and then the markets just start tumbling. So I just held off, and I was actually looking close some of my March 45s, but by that time they had fallen quite a bit. So I'll just hold those. I'm still bullish on lemonade, especially if the market finds some footing. I mean, yesterday was just another great example that I think that in the midst of a squeeze, but now the market's giving the shorts a little opportunity to kind of collect themselves, right? It's like a sigh of relief that, hey, it's not, it's like a pause there. So I don't know, I'll wait for it to find some support. If it does, I'll look to get the April strikes, but I'll continue to hold the March 45. Still like that name. But disappointed to see it reverse all the gains into the close. But I mean, it was a rough end of the day. Then on the flip side, so yesterday I was looking for put hedges all day. So, I was looking at MicroStrategy or strategy, you want to call it. It was 295 at open, it was down to 270 or so. I was looking, I'm like, what happens if crypto continues to fade, Bitcoin continues to fade, and micro continues to fall? I was looking at the 200 puts. They were like 90 cents, and micro MSTR was at 270. I'm like, wow, the premiums are expensive, but I'm like, oh, maybe if it falls to 250, and then it was dropping to 260s, they were still like 95 and $1. And every time it upticked like 50 cents, the premiums will come out of the puts. So I'm like, this risk reward doesn't make sense to me, because you see what happens with the market sometimes. You saw it on Friday, especially at that end of the day, that when we have market sell-offs like this, the reversals are nasty. And when they're nasty, any kind of put position that you've been patient holding that are solidly green, you can go to the bathroom, come back, and they're destroyed. So I didn't want to be in a spot like that or some kind of overnight news. So I passed on that. Sure enough, the 200s did go up to 100%. I mean, they'll probably be up a little bit more here at the open. But other names I was looking at, Broadcom. Broadcom's been one of my favorite put hedge plays over the. I mean, it was great last week. I was possibly looking this week, but they have earnings. So sure enough, it opens at 205 and reverses almost $20 yesterday. But again, premiums made it somewhat unplayable for at least how I trade and the risk reward. So I passed. And then Intuit. So Intuit's another thing. I'll pull the chart in a second. There's been a lot of these earnings reversals, stocks that have soared after earnings that have given back those gains in MSUM, First Solar, SolarEdge, Unity. There's others. Intuit, another name, had sold off down to 570, 580. Great earnings, stock gapped, ran, and then has given back some of those gains. It looks like it's going to do some kind of reversal down to 580. So that's a name I'm watching. And then finally, JP Morgan, which I had hedge puts on, able to close some for freebies last week, and finally went back to grab some. 50-day moving average there is at 257. So I think if that 257 falls, it's headed to 240. It's just a matter of how far. So we'll see what it's right here, 258 here in the pre-market. If there's some weakness, hopefully I can get some out to cover cost, ride the rest. But it's been a rock. It's almost like you look at the JP Morgan chart, and only a week and a half ago, 2 weeks ago, was at all-time highs, and it hasn't really pulled back as much as the rest of the market. So is that either that it's probably not going to fall more, or is it just because it hasn't succumbed to the market pressure yet? I'm hoping the latter. We'll find out. Similar to Visa, you wouldn't even know the market has pulled back. You look at Visa, all-time highs yesterday before pulling back in the afternoon to close in the red. Another name, it's like the most frustrating thing is to be in puts and the market fall, and that the name you're in puts in is green, right? I mean, it's like you might as well, it's the most frustrating thing. So I don't want to be in a situation like that and let my bearish bias on Visa kind of make me, or have me think that it's going to fall with the market. So I'll be very cautious here. But if there's another name I'm looking for puts on, it would be Visa. And then last but not least here is Intuit. And I mean, you look at this chart on Intuit, over its 200-day moving average on earnings, then a pullback the next day, a little bounce the day after, and then yesterday, small follow through. I mean, it looks to me like it's going to 570. So liquidity is not the best on the options. So I'll be very cautious adding some positions here. That's Intuit. And then some other names quick. TripAdvisor was solidly green yesterday, looking to make back-to-back green sessions in a row. First time it's done that since the start of February. And then it succumbed to the market pressures. Still like that name, but doesn't matter if I like the name if the market doesn't cooperate. So we'll be patient and it strikes there. And then Caterpillar and URI. And, if there's any name that probably speaks to volumes around the economy, maybe it's Caterpillar. It's kind of flashing those signals as, costs around stalling some of these payments for the infrastructure bill and things like that start to weigh at the start of, at the end of January and into February, then their earnings, and now just some continuation here. So, I keep looking for Caterpillar for a bounce, and I think once it happens, it's going to be a massive one. It's just a matter, I don't want to catch a falling knife. And same with URI, down almost 4% yesterday, hitting multi-month lows. Again, another name, and I think once we get a reversal in the market, could be some bounce plays. But other than that, it's a good time to be cautious, find support resistance areas, and then that's why I'll continue to play those spots for now. And if things get crazy in the middle of the day, I'll get back on audio. Let's have a great day. I'll be back rock and roll.